Hello everyone, welcome to the Ichimoku.co daily market review for the trading day ending Thursday, July 10th. Firstly, to the S&P 500, a continuation of the trend to the downside today. Yesterday's trading suggested potential for a change of trend to the upside with a bullish Harami pattern and a potential hook reversal bar chart pattern, and we didn't see the market trade anywhere near the highs, so nowhere near being a reversal for that day. We saw the sellers take out the low fairly early, but we saw the buyers come back into the market after the sellers lost commitment down around the support at 1955 and support at the Kijun-sen indicator. We have seen the buyers take control of this candle by the close of trading and suggesting potential for a change of trend. Now, the only problem here is that we now have the market trading down below the Tenkan-sen, and for today's trading we've seen some rejection from the Tenkan-sen. It's holding as resistance now, so some very important trading coming up over the next day. That will be an important level around the highs of today's trading, as will the area down around 1955 and the Kijun-sen indicator, which is trading at 1952. There is potential for this trend to continue down, even though we saw the buyers coming in strongly, but we do have that very solid support down below. We do have a bullish market in the longer term and medium term time frame still, supported by the Chica span, but we are just negative now, and that may be in that fast term time frame, and that may be something of a clue as to that sentiment in that first term time frame, and certainly saying something about the lack of strength from the buyers at the moment. But there is an opportunity for the buyers to change this trend and for potential to test up to the 1985 high. Now, just looking at the Fibonacci extension, and importantly here we've seen the market rejected for the second time from below the 100% level, with the buyers taking control this time and suggesting a possibility of a change of trend to the upside. Now, if we don't see that, then we will be looking to the 161.8% level for support at 1947. Moving next to gold futures, and here we see the market trading up above the important 1329 level of resistance, and importantly a close up above. A nice extension to the size of the white body here, suggesting that the buyers are maintaining some upside momentum. The problem here, however, is that as the market tested to around the 1350 level, we saw the buyers losing commitment, and we've seen neither side close with control, with the market closing around the midpoint level. So a lot of the strength that the buyers had throughout the trading day has been lost. But the important thing is that we do still have a white body candle, and that suggests that there still is the bias towards the sellers in that short-term time frame. We also saw the Tenkan-sen hold as support somewhat for the market today, and that will be an important level moving forward, and it coincides with the 1329 level of previous resistance, so expect some support to come in around that area. But we do have a bullish market in all three time frames now, and that's supported by the Chica span being above the corresponding price action. Now, one thing just to watch here for is that there is a potential divergence with the MACD histogram indicator, which is a measure of momentum. And here we have the market making higher peaks as the MACD histogram is making lower peaks, and it suggests that the amount of momentum that was in the market, even though we are making these higher price achievements, the amount of momentum is becoming less and less, and it is suggesting that there is a possibility of us seeing something of a retracement fairly soon. Now, the only thing is, though, that we need that peak to form here on both the MACD and the price action, and what we need is a lower high and a lower low on the price action here, and for the MACD to actually tick down from the high for this last reading on the MACD histogram. So if that happens, then that will be something of a warning signal for us, but we don't take these warnings too seriously when we're in an uptrend. So the thing here is that with the Ichimoku charts, we're in an uptrend in all three time frames, and this may warn of just a pullback. So what we'll be looking for here is for the market to perhaps come off once that divergence is established, and for the Tenkan-sen to hold a support, or for the area down around the 1310 level to hold a support. But it does give us a warning that it may be a time to take some profits if we do have a long position in this market at the moment. Moving next to light sweet crude oil, and here following that very strong black body candle down day that we saw the market take out the 103.39, we've seen a good solid response from the buyers, changing the colour of the candle from black to white, which means that the buyers have built some upside momentum in net terms, and they've also closed up towards the high, so suggesting that the buyers have taken back control for this current candle, and it suggests there is good potential for a change of trend to the upside. Now the only problem here is that the trend hasn't already changed. We still do have a lower high and a lower low, but this is a potential bullish harami pattern. That's where we have the previous downtrend in place. Then we have the body of the current candle, a white body within the body of the previous black candle, and suggests that there is a possibility of the trend to change in the first time frame. So we will be looking for the high here to be taken out to establish a higher high and a higher low. Now the problem here for the buyers is that we have close by resistance at 103.39 and then at the Tenkan-sen at 103.82. For today's candle, we've found support down below the Ichimoku cloud. We have a thin part of the cloud, so there is an opportunity for the sellers, if they're strong enough, to change the overall sentiment in this market in that longer term time frame to the downside. We do now have a bullish market once again in that longer term time frame, with the market trading back out through the top of the cloud. But what we want to see is some decent follow through for confirmation of that. Looking at the other indicators, however, we do have a bearish market in the medium and fast term timeframes, but the Chica span here is within the price action, so we're not getting any confirmation of any of these signals at the moment from the Chica span, so we do need to be very careful of any of these indications. If we do have a bearish close down below the bottom of the cloud and we see some follow through, we could end up testing back down to the round number 100. Next to wheat futures, and here we see continuation of the trend to the downside, a spinning top candle suggesting some indecision in the market, and there is a possibility of a change of trend to the upside here following this indecisive candle. The problem here for the buyers is solid resistance at 557, and then above there even stronger resistance around the 569 level with the Tenkan-sen, and just above there the 575 level. We do have a bearish market in all three timeframes, so let's watch the low for the potential for the market to trade lower. If we see strong bearish activity, we could be trading down to 526, but with the indecisiveness entering the market, there is a possibility of the market rallying and perhaps finding some resistance at 557. Now just looking here at the MACD histogram with comparing it to the price action, we are having some massive divergence here with this downside momentum drying up all the time, and as the market's been making these lower troughs and the trend's been looking healthy, what we've seen is that on each occasion the amount of downside momentum is being lost. There's less and less momentum, and it is suggesting that we may see something of a retracement fairly soon, and that wouldn't surprise. A retracement initially to the Tenkan-sen indicator at 569, if we can overcome those short-term barriers for the market here, wouldn't surprise. Combined with this potential divergence with the MACD histogram, the price action is a fair way below the cloud and the market is looking overextended, so there is potential for this market to retrace, and it is certainly long overdue. Moving next to the US 30-year bonds, and here we've seen an extension of the trend today, a candle making a higher high and a higher low. And if you recall, following the breakout from 2 trading sessions ago, we were looking for some decent bullish follow through. We haven't really seen that, so even though the trend is continuing up, we do have this very small body, and it's not the type of body that we want to see. In net terms, the buyers are still making momentum, but it's still a small amount of net momentum between the open and the close. And what we've seen is the buyers losing commitment at the 137.25 level and above the 136.31 level, in line with the loss of the commitment that we have seen previously. Now the only thing here is that we have just closed above that 136.31 level, and it has been on a candle where the sellers have actually taken control of the market by closing down below the midpoint level. The buyers have lost the control that they had, so it does raise some doubt about whether the market will be able to rally to this 137.25 level once again. If the market comes off, looking at 136.31 for support, and then at the top of the cloud around 136.12.